Hey guys, welcome to another episode of Real Talk. We're back.
We're here.
We had a little week off. We're just getting lazy over this last weeks of summer.
Yeah.
You and I.
Yeah.
We're just like, we'll just get to it when we get to it. But the people need us, so we're back.
They do.
They need
The
our
demand is
advice and our
huge.
expert opinion on the different various things going on in the market and our personal lives. So, yeah.
Yes.
Yeah.
It's
How's
a
it
big
going?
deal.
Speaking of personal life, not related to me in any way, and it just popped in my head. I saw an ad for The Bachelor in Paradise. It's not The Bachelor in Paradise. Bachelor. We used to watch it all it but ended up, getting too old to care.
Right.
But they're like old people and young people, and almost like,
oh, really?
I don't know the dynamic of the latest one, but it just seemed weird to me. But
yeah.
Speaking of personal lives.
Yes, I think I watched maybe like parts of the first few seasons.
Oh,
whenever that was.
Huh?
Yeah.
That was
I
a
wasn't
long
really
time ago.
long time ago. Yeah.
Yeah.
I've never really never really gotten into that.
Yeah, once they got rid of what's his face, the main guy on it, the announcer guy, or the what is it, the MC? I don't know his name.
Yeah. Is that the guy that does the Survivor show?
No,
or is that a different guy?
But that's the character that I'm talking about.
Yes.
But once he got booted off, I was like, yeah, I'm done. So
yeah.
Anyways, that's going on in the Bachelor world.
Perfect.
Apparently old people, young people hooking up. So that's cool.
Heck yeah. There we go. I don't know if you're going to be able to hear any of the construction that's going on, but if you do hear some thumping and saws and everything, we got new landlords, and so they are like completely redoing the whole upstairs and conference area and over there. So
that's great.
We're technically not in a construction zone, but everything surrounding us is.
Yeah.
So sorry if it gets a little loud. Yeah.
Well, the market, we were just kind of chatting beforehand. There's signs of improvement on the mortgage side of things. However, it seems frozen to me.
Yep. On the transactional buying and selling side.
Yes.
Yeah. Yes.
Yeah. What's going on with the mortgage world?
Well, feels like we're starting to finally like stabilize a little bit more, less like crazy fluctuation, or maybe it's just because the fluctuation that's happening seems to be improvements in rates. So it doesn't feel as chaotic.
Yeah.
But it does feel like we're kind of stabilizing. Everything is pointing towards the Fed officially dropping rates by a quarter in September. I don't know how much of that's been factored in already, because with the meeting notes from last week, the market reacted. There was another reaction a couple weeks back. So it's hard to really know if that's all priced in and factored in. So when the Fed comes out and announces that they are lowering rates, there's a good chance that mortgage rates could just stay the same. But it does impact the short-term stuff like home equity line, credit cards, car loans, things like that. So those will go down with it. But the mortgage side, if the market has already reacted to it and starting to price it in, then we might not see much of a difference. But we have seen an improvement over the last couple weeks. I've made some notes. So instead of just me saying kind of estimates on things, I actually made a few notes just to kind of give people an idea on. So today, before we got in here, the national average, according to Mortgage News Daily, is at 6.51%. So that's your 30-year average. So that kind of like rolls in all types of 30-year loans, but that gives you a ballpark average, right? So the last time we were there was in October of 24. So we're in line with where we were, almost a year ago.
Okay.
Prior to that, the same rate was in August of 24. So we had August, they went up, and then October they came down. Prior to that, it was December of 23. And then prior to that was April of 23. So this isn't necessarily, it feels like we went up to 7.5 and we stayed there. And then now we're finally getting back down. But you can kind of tell just by that little bit, it's a lot of up and down and up and down and up and down. So trying to time the market, as part of why I put this on here, was just like, it is really tough to time it, because we're at a good point right now, or what feels like a good point. But we were also there in October of last year. We were also there in August of last year. We were there in December, so it's like, it makes it really tough to time it, because in between those gaps, the rates were higher.
Yeah.
So it's like, It's really tough. And then I put on here too, in October of 23 was the highest that we have seen over, say, I don't know what the time frame was, but say the last 10 years, right? In October of 23, they were at 7.9% for the national average. And
Crazy.
then by December of that same year, so just a couple months later, it was down to 6.6. So we went and hit this peak, and then we really kind of leveled out and stayed in this mid 6, low 7 range. But again, another point there is it's just really hard to time it. That went down almost a point and a half in
That's crazy.
Yeah, almost a point and a half in a matter of a couple months. So really tough to plan it. It does feel like we are trending in a good direction. There's more and more stuff coming out that feels positive and feels like there's potential traction. That doesn't necessarily mean the rates are just going to go crazy awesome, but
Yeah,
I think just stability is great, at least for those of us trying to figure out when you're going to lock loans and
for sure.
and guide people through that stuff. So definitely not settling down with it, but at the same time, it does feel nice to kind of have a little bit of stability where you don't have to just be like eyeing the market all day long, because what if somebody posted something, or what if somebody said something and now the rates are going to go up 0.25% tomorrow? And so feels like it's getting stable, but who knows?
I know. And I think, like, I was just reading an article, and I've kind of known this and thought of this, is like there's a freeze, and we've seen uptick anecdotally. We've seen uptick over the last week or so of people kind of jumping back in. But with everyone having rates at such a low rate, the traditional buyer that bought a few years ago at 4%, 3.75%, whatever the case was, it's not the traditional market where buyers are coming back into the market and sellers aren't willing to lower their price, is what I'm trying to say. In a traditional market, sellers see the market going this way. They have a 6% rate or a 5% rate, and they're selling at a 6% rate or 7%. Like rate that they have is similar traditionally. Now they're looking at a 3.75% rate, getting out of the market into the market at a 6.75% rate, and they don't have to. And so there's not that traditional ebb and flow of supply and demand. Sellers don't care, and we've seen it skyrocket of sellers pulling their home off the market, which isn't common because and so we're seeing that because of the rate differential between what it is and what they have. That's why this is such a weird market, and it's kind of a frozen market. Sellers aren't willing to budge on their price because they don't need to, they don't have to, and buyers aren't willing to budge going the other way and offering more than they think the house is worth. So it's a really unique time that we're in right now, from what I'm seeing. Is you have stalemates on both sides. Both are saying my house is worth this and I don't care because I pay a very low monthly mortgage, so I don't have to go. We'd like to. And then buyers saying, well, I don't care either. I'm not paying that high of a mortgage and that high of a price with it. So it's a weird one, and someone's got to break at some point, and I don't know if that break happens sooner or later. I don't foresee it happening very soon for sellers. I think the majority, I wouldn't even say the majority of sellers. There are always people that getting divorced, death in the family, moving jobs, have to go, upsize, downsize. There are always those people, and they will, and they currently do move, and they're currently sell, and they currently buy. Having said that, I don't know the percentage of the population that is like, we would like to upsell, like we'd like to get a bigger home, but we don't have to. And, and what buyers are saying, well, we don't have to buy like at these rates because they're nuts. So it's just I don't know, interesting times.
It is. And that's the same thing that I'm seeing and we're seeing here in our office is there are not a lot of people that are buying that are just like, I think we're just ready to buy. We're tired of renting. We're ready to do this, which is what so many first-time home buyers go through. Where it's like, all right, I think this is our next step. It is, like you said, divorce. Maybe their payment is just too high. They just got into more than what they can afford now. Over a couple years, people's employment changes, family, you might have another kid, costs go up, whatever it is, but it's all very purposeful moves in buying and selling instead of just, and I think that's where a lot of the market or why it's a lot slower is just the first time home buyers, the people that are just renting, that are newly married, maybe had their first kid, just wanting to get more space, wanting to get a place of their own. They're still just priced out enough.
For sure.
And that eliminates so many people, where now you have just the people that do want to upsize or downsize or divorce or whatever. And, you know, like you're saying, there are all those transactions that are happening. It's just, those have to happen.
Yeah.
Not all of the others, people buying vacation homes. And again, every version of purchasing is still happening.
Yeah.
It's not as if
not
like
to
there's
the extent,
certain,
though.
Yeah, just not to the extent and not to the number that we have seen in years past. So I'm with you. I think that there's still a lot that has to happen. I do know that mortgage rates really play a big piece in that, because obviously if it's more affordable, people are going to do it. But
I think mortgage rates just will never, mortgage rates just won't get to that level again unless it's an artificially made, like it was in COVID rate. And the problem is you're going to have to eventually people have to move eventually.
Yeah.
But your funnel is so much smaller of the people that are moving.
Right.
Once those rates become obsolete, because eventually people move, but that's talking years over time that people could be sitting in their home longer than they like. Then you start getting those rates that are all relative. Then the supply and demand happens as normal.
Yes.
But it's a long game. Like
totally.
It's a long game, and it's hard for sellers. I would say buyers, man, if you can get in now, like I've never seen sellers more desperate to kind of get things going, like at least make deals happen. Especially the ones that have to move. The ones that don't, sit there and they just are like, we don't have to sell. But man, if you can find a house that sellers need to get out of there, you can pretty much do whatever you want. So yeah. I wish I would have screenshot it or had it pulled up, because I'll share it with you next week. Something that was sent to me. And it was the gap in buyers and sellers right now that shows from the data, however you like to pronounce it. I'd say data.
It is
data. Yeah.
Data.
I don't know.
I usually say data.
Both. Data.
I kind of do too.
Do you sound smarter with data?
I feel like I do. Yeah.
Data.
I feel like with data, I'm actually knowing what I'm talking about. Data is like, okay, maybe you got it through high school. I don't know.
Once.
Okay. Sound it out. How does that supposed to sound?
So the data,
yes, shows that they're like, it is a buyer's market right now, right? Like, even though the market might not be acting like that, and it's not a frenzy for buyers. Yeah. The amount of homes that are for sale and the price reductions that are happening, it is 100% a buyer's market. And I bet you could
no doubt
ask any seller any real estate agent that's listing homes and saying it is 100% a buyer's market, but it doesn't feel like it because buyers don't feel like they're getting some screaming deal.
For sure.
But it is as much of a buyer's market as you can get.
I think it's location specific too. And I think that we say this all the time, but man, I looked at an article in Vegas and as an investor, I was like, man, Vegas is got an inventory problem. They are going up like crazy. They fluctuate significantly in price depending on the market and the different things. Just because it's tourism based, and so when people are pinching pennies, there's less tourism in Vegas, which means the housing market goes down. But man, as an investor and a buyer, Vegas could be, you're buying low in Vegas if you I was like, those sort of markets should be something any investor should be looking at. Even a beginning investor is like, those sort of places. Yes, you're based on tourism and your price could fluctuate, but right now you're hitting the bottom of the market and having the ability to buy pretty low in those sort of vacation tourism based places where people aren't going as well. I think it was down 11% last I checked, tourism to Vegas. So really, and the increase in inventory and the decrease in pricing and all that sort of stuff. I'm like, maybe something to look at. Maybe talk to Cody about
a little investment, little DSCR loan.
Yeah, DSCR loan sounds great. But I like being on the Strip if I'm going to go to Vegas. Sure. I don't want to be forced into a house.
We can finance you something on there.
Yeah, maybe I'll get a condo on the Strip. Like a midlife crisis can purchase.
Right. Isn't it funny though? Like when you look back, I think everybody wants the the dip, like that was the 2008, 9, 10 range, price range where rates were at. And it's like, oh man, if I was in that position, I would have bought so many. But then you start to go through like we're going through.
We're in it.
This,
we're in it.
Yes.
And
we're in this
transition
period.
Like, man, I wish I would have bought in Vegas.
Yeah, 100%. Yes, you're going to look at it and go, yeah. But it's hard because most people, your average person that doesn't have hundreds of thousands of dollars or all this ability to invest, they're like, man, things are kind of crazy right now. Things are expensive, all this other, like maybe we'll wait. And then we get through this and then you look back years later, just like we looked at COVID, 2020, 21, early 22. That was a great buying time, even though you might have paid more for the home. You know, it's like in that moment, it really does take a kind of a leap of faith and doing your research to go, all right, this might seem just like a financial planner would tell you, buy when it's low. But everybody wants to sell when it's low.
Yeah, and you're always pinching pennies, and it's like, this is the time to take risks, and this is where those big time investors and big time money makers make the most money, is when everyone else is scared, they take advantage of it. And so if you are getting into investing, it's the time to do it for sure. Talk to people, get all the information you can get, do your research. It's there, and sellers are willing to sell their place, especially people putting on the market that need to go. So anywho, my man, well, it was good to talk to you, and
you as well.
Until next time, we'll see you later.